What's up guys, welcome back to this brand new video. Super excited after the meetup yesterday. It's been really great to meet other traders and talk and have a good discussion. So super excited for this video today. And I want to tackle one topic. I think we need some lights. How to deal with those spikes in the market. And I have three strategies for you, three tactics today that can help you deal with spikes. You know, this is really frustrating when you put in a trade and your stop loss get hit and price reverse not long after in the exact direction you put in the trade first. So I want to cover those today, and this is something that happened a lot. You need to be able to accept it, that you can be stepped out sometimes and that you cannot do anything about it. Sometimes it happens, but there are things that you can still do to make sure that this happens less often. Just make sure that if it happens, you're not discouraged, you stay in the same state. You cannot let yourself be influenced or change your mood because of a bad trade or a losing trade. Okay, that's only going to be bad. So let's talk about the first strategy. The very first thing is to avoid trading during speeches at all costs. This is something I've done a lot in the past, especially when I was trading lower time frame, and even all the way to the forward chart. I used to be stopped out very often with a speech, especially on pairs like AUD and JPY. Those were pairs that really were moved a lot with speech, kind of overnight here in Canada. Those can be very, very disastrous for your trades, especially because of the fact that people react to speeches and there might be an initial reaction that's kind of changed after that by the right reaction, the reaction that you were in the trade for. And you cannot really know how people are going to react. Sometimes there's a push, you get stepped out, and price goes back in the right direction after that. So very dangerous. I've been stepped out multiple times because of a speech to just see, like not long after that, I was in the right trade before. And that's something that I try to avoid. Although now I try to be less cautious about speeches. They happen. Sometimes they are in my direction, sometimes not. But if you want to be less stepped out on random occasion, watching out for speech, you can just go on forexfactory.com, check out the news, like news release, and the speeches are going to be there. Usually they're going to be marked in red, which is like the major impact, and you can just watch for those and try to be careful to not trade during a speech or not place a trade when you know there's a speech coming up to like the same night or the same day or whatever. Okay, so that's the first tactic. The second tactic is to change a little bit the way you see your stop loss. And this is something I don't personally really do, but I know it can help a lot. A lot of people want to place their stop loss based on candlesticks. For some strategies this is really good, it works, but for some other strategies this is bad, this is terrible advice. You need to understand when it works and when it doesn't work. And the only way to know is to kind of see the chart and understand how your strategy works. Now the easiest way to tweak your stop loss to make it work a little bit better is to use what we call the ATR, the average true range, which is an indicator showing the measure of how much the price moves during a period. Maybe that's going to be a day, maybe it's going to be an hour, or whatever time frame you look at your indicator on. But that's a very good tool. You know, on average, over 20, 40 days, whatever, the average range during a day. And you can adjust the stop loss that way. So one of the strategy I'm backtesting right now, and I showed you guys the result a little bit yesterday, has a stop loss where you take the value of a moving average and you add to that the ATR times half. So that's a good way to do it. And I'm looking at whether it's better to do it with half the ATR or one ATR. Quote from, I think, Dale Pinkard here. He said, if you cannot endure the movement for one full day on your trade, which is basically the ATR value, you're probably putting your stop loss too tight. Okay, it's just something similar to that, but you'll see the interview pretty soon. So that's the second way, a very powerful way to modify your stop loss. Take the ATR and try to backtest whether it's going to be better taking the ATR, the full value, or half of it, or whatever, depending on what time frame you trade on. It could be very powerful. Now the last way, and this one is kind of not exactly into the topic, but when you get stopped out, the simplest way you can deal with it is to have what we call a re-entry strategy. So if you get stopped out, it's not the end of the world. You can always re-enter. And I've done that multiple times where I was stopped out in my first trade, price would go in the right direction, and then I would re-enter, not like a little bit later on, but on a smaller time frame. And then it is very powerful. You take the same setup you have right now. For me, it might be like a Bollinger Band reversal trade. Instead of entering the forward chart or the daily chart, I might see the move, I might miss the first move, but I will re-enter later on in the same direction on the 1 hour chart. That works really, really well. And depending on your setup, could apply or not apply. But having a re-entry strategy is always going to be a good way to enter either the trade you miss or the trade where you get stopped out and you want to find a way to get back in. And also, your setups are always going to appear at the perfect zone on the chart. So if you're going to trade resistance areas, it doesn't mean that price is going to go to the resistance, show your trade setup, and then reverse. Okay? Or it doesn't mean that you can have a perfect breakout and do a breakout and then have your perfect setup at the breakout. Not always. So you need to be able to re-enter the market. And re-entering the market is kind of a sometimes less risky way to trade. You're already in the right direction and you've had this first move, which it kind of is the beginning of a trend. So it could be very powerful to have for yourself a re-entry strategy. So that's the other way to deal with it. And once again, those are not strategies that I all use. Some of them I use, but I just wanted to give you guys a small idea of what is possible. And the goal of this is not to tell you do this, do that exactly, but that you get ideas on how you can improve your current trading. As always, you need to backtest things. Not because you take the ATR that your strategy is going to be optimal and the best from now on. It doesn't work that way. You have to test, you have to be diligent, you have to put in the work, and hopefully you get some ideas from this video. I would really love if you can let me know your thought down below. This video also came as an answer from one of my subscribers. Subscribe if you're not subscribed yet. I'll do my best to help you out. And I'll see you guys tomorrow for the next video. Ciao.